What we're really looking for is an ambassador, and you'd like somebody who can really represent South Africa well and do our industry proud.
My name is Colin. When I left the Royal Navy, I started in insurance, and then I went and did my NQFs from 4 to 6 through UNISA.
My name is Belisa Mochani. I did a 3-year course, a BCom degree in risk management and economics. I'm currently doing my commercial course with Millpark.
I'm Reese Aaron. I would describe my personality as someone that's very competitive. I also always try and put the best into whatever I do.
Hi, my name is Matthias. Started off doing a BCom at Wits University. I then enjoyed insurance the most, and I'm currently a master's student at Wits Business School.
Hello, my name is Jake Pinnacini. I attended the University of the Western Cape, where I completed my LLB. I realized how I could apply it to the insurance industry and then consciously made the decision.
My name is Ditebogo Mokhalaboni. I was working in a non-profit organization in education, and I met a lady who introduced me to insurance, and as they say, the rest is history.
My name's Kishan Van Mali. I don't know if insurance chose me or if I chose insurance. Having studied risk management, I thought it would be a good opportunity when it did present itself.
My name is Gillian Riley. In terms of my competition, I probably shouldn't say this, but I think they're all pretty awesome people. I'm worried about Joburg. Joburg's my competition. That's who I'm here to win against.
We're at the FSCA for today's task, and you know, the place in itself for most insurance people is quite an intimidating building to come to. Whilst the FSCA is responsible for helping us professionalize the industry and make sure that customers get treated fairly, they also have to deal with obviously regulatory issues. Welcome back, guys.
Hello.
Hello.
How are you feeling?
Good.
Excited? Nervous?
Yeah.
Okay, you've done well to make it this far. You can definitely pat yourselves on the back, considering there were over 200 applicants and there's just the 3 of you left. But I do want to just remind you that today's task is probably one of the tougher ones.
Being the only female in the top 3, it has its pros and cons. I'll say cons because there's a lot of expectations from people, and obviously from myself also, but then the fact that I'm the only female, everyone is expecting me to do better.
And whilst we may not have dismissed somebody at this stage of the competition in years gone by, that doesn't necessarily mean that won't happen today.
Just today, I wanted to look like the Insurance Apprentice. So I got up, I wore my black suit, and I wore a red tie, which is almost the persona or the caricature of an Insurance Apprentice. But then I realized that the red tie is actually not for me, and I'm more of a pink tie type of person.
The scores are all very close, so it's anybody could take the lead today.
With regards to Simon's reputation being Judge Dredd, I don't really find it too intimidating. I kind of know that's what he's here to do, and so yeah, if he gives you constructive criticism or not constructive at all, you just kind of take it on the chin.
We're very fortunate today. The FSCA, or formerly the FSB, were sponsors of this competition right from the very beginning. And Caroline Da Silva is here with us again, and she'll be taking you through today's task.
So the task, once again, is for the apprentices to play the role as if they're working for the FSCA. And what we've done, as we've done in the past, is we've given them a very real issues that we're grappling with. Today you will be playing the role of an FSCA staff member. And the reason we want you to play the role of an FSCA staff member is because when you give deliberations to the issues, you need to consider all aspects of the sector. The intermediaries, the insurers, but the customers as well. And in this task, we've even thrown in the Prudential Authority and systemic and concentration risks, because we are a new authority that looks at things more holistically. And we've given you the task of looking at premium collection particularly in the short-term industry, because we had a failure last year of governance and a particular institution that resulted and impacted on insurers. Customers were to a large extent protected by the legislation, but it could have had consequences for customers if we hadn't stepped in and remediated the issue. But the events around the insurer group and premium collection last year demonstrated to us that there's a need to shift the status quo in terms of premium collection, to manage risk to customers, to manage concentration risk, and to manage the risk to insurers. But it's a complex issue, and I understand it's a complex issue. You were to go and interview the relative players in the industry, and today you're going to give your feedback as a proposal, as a member of the FSCA, what we need to do to mitigate these risks and look after all parts of the value chain.
Today, I'm looking forward to them coming up with creative ideas. We are faced with a challenge currently around premium collections. And really, the biggest challenge being around ensuring that there's duty of care in whoever is actually dealing with the premium collections. Now, what is it that they're going to be putting on the table that's not going to stifle the industry?
All right, you know what to do. Give it your best shot. You're dismissed.
All our tasks, we had like 3 hours to prepare. So having a week, it gives you more advantage to research, to ask people around, and even the final task needed us to do our research properly and ask everyone in the industry how they felt about this particular task.
I feel like I engage with the correct people. So I've always been a person that believes that doing more doesn't necessarily mean that you get more done. So I focused on engaging with key stakeholders who I trusted and who I knew had scope and insights into the task, and I'm comfortable with the proposal that I have for today.
I don't think there's enough time in the world to prepare for today's task. It's a very emotive topic, and you almost have to be an expert in about 3 or 4 or even 6 or 7 legislation. So it's, as much as we have a lot of time, it has been a very big challenge. We've been given this task, the FSCA task on premium collection. With regards to the current way of thinking that the FSCA are going, the onus is on the insurer to regulate the brokers to a certain aspect. Now, I like that way of thinking. I think it's very important because the insurer is the person who ends up with the money at the end of the day, and it brings into the question of who the money should go into in which account, if it should go into the broker's account or the insurer's account. The biggest issue currently is that brokers who collect premiums on behalf of insurers and put it into their bank account can have an accumulation of risk, which if it isn't regulated properly can cause, as we've seen, damages to insurers themselves who would be out of pocket for month's premiums and so forth. When the insurers have that agreement with the brokers, they need to make sure that the right things are in place. And the things that are in place are already stipulated, but if they are in place and the due diligence is done correctly at that time, I can't see how there would be an issue with that accumulation. One of the issues that comes from having a designated premium account, which is regulated, and what people were doing in the past is using that premium account to pay for their monthly expenses as a broker, because they were rolling it with the 30 days and 15. And they were also earning interest on it to cover the cost of collecting premiums, because there's a lot of background work that goes into collecting premiums, and that cost has to be incurred somehow. Currently, it's presumed that that cost is covered in your Intermediary Service Act as part of your commission that you earn. But every broker earns the same amount of commission, rather if they collect premium or not. So to be able to justify why they shouldn't earn an outsource fee and change potentially the Intermediary Service Act, it's difficult not to do that as far as I'm concerned. I think that's the real answer to the solution of putting the money in an insurer's account where the insurer has got full access to it and control, and it can't be rolled or used for any other thing other than their own interest or whatever they want to invest in, and that's very well regulated by the FSCA and other governance that's in place at the moment.
So first of all, the premium, as soon as it's paid to the broker, is deemed to be paid to the insurer. Okay? So the interest should really fundamentally belong to the insurer. But I agree that brokers should be compensated if they're performing activities on behalf of the insurer over and above what a normal broker does for commission. I still don't understand why they have to hold the premium to do that, because if you take the interest equation out and you have the outsourced fees being paid to a broker for those activities, would that not deal with the need to hold the money?
That's exactly. The outsourced fees would deal with the broker needing to hold the money. I mean, it takes away completely. So that's why I said, so for my solution is to look at the Intermediary Services Act and to potentially change that so that collection of premium as a broker or intermediary would fall outside of that realm, which would take away the fact or the necessity of the brokers having premium in their own accounts.
Okay. Thanks.
Thank you.
Sure. Thank you. It was an interesting presentation. It didn't quite go in the direction I wanted it to. There was a lot of information which I tried to get across, but yeah, it went as best as I could and how I prepared. So yeah, happy to see what happens.
The argument was a bit confused because if you move to an outsourced fee, there's no need to hold the money and earn interest. But he kept going back to we need to hold the money and earn interest because we need to cover the costs, and that's so he was looking for areas to protect that money when it's held in trust by the intermediary, and it is held in trust not on behalf of customers but on behalf of the insurer. So he's right as well that the insurer should govern this process, but the risk still exists that different governance levels will drive books of business based on what's better for the intermediary or the industry and not for the customer.
So, guys, today we're looking at the future of premium collection. My team and I have worked on a bit of a proposal for us in a way that we can take it forward. So back in the day, brokers would collect premiums. They would go out and see a client, whoever they may be, pick up a check, 12 checks, whatever the case may be, go back to the office, the admin person at the broker would then bank the check, and that's how things were done, because the insurer was often remote from where the clients were. Predominantly in this sense as well, these premiums were paid in advance. So the assumption was that insurance policies were annual policies paid in advance. So it was also reasonable then to expect that there'd be about a 45-day, if not longer, gap between the broker collecting, collating, assembling the premium, and actually handing it over to the insurer. Looking more recently, times have changed, banking, the time of information, technology. Premiums are now collected monthly. Then came the IGF, so we started worrying, well, the brokers are collecting premium, they're holding on to it, where's the guarantee? So we went with the approach that the broker would either acquire a bank guarantee or an insurance company guarantee. So a specialized insurance company in the IGF was formed for this, and we're comfortable again. Insurers are more than capable of doing their own collections, and a lot do for a substantial portion of their books. However, there's still an essential or critical role that a broker plays. So most often the information sits on a broker's third-party system. They're in the best position to give the mag tape or the collection file to the bank or to a collection agency or wherever it may go to. Let's look at premium collection agencies then. So they saw this as an opportunity to scale. So now instead of having a broker that collects 20 million premium a month, we now have collection agencies that collected 100, 200 million rand a month. And potential oversights in the immediate past was perhaps, first of all, undesirable business practices. So there was an opportunity for people to roll premium, to perhaps put premium while they're holding onto it, allocate premium to activities where you couldn't necessarily liquidate or turn the money into cash again 45 days later. There's an obvious potential for fraud, which I won't go into too much. And also an oversight is that insurance companies didn't actually spend too much of time looking at this risk. So how do we move forward and alleviate the systemic risk? So I believe that collections should go directly into the insurer's bank account. So whether the broker does it or whether the insurance company does it doesn't matter, but the insurance company, as the risk bearer from day one, needs the money in their account or under their control from day one. And we need to find a way to put the broker back into a situation where they're getting almost that money that they would have accrued from holding the premium. So how do we sort out the fee? It should be an outsourced fee. However, the law doesn't allow us right now to pay it as an outsourced fee because intermediary services is remunerated through commission in the FSCA Act. And if we look at the definition of that, collecting and accounting for premiums is already paid for. So looking at the whole change management process of how that should actually work, I believe that we should change the definition of intermediary services in the FSCA Act or wherever else it sits to take out the component at least of handling the premiums, dealing with them and all of the critical functions that a broker still plays in that critical control regard. Taking it out of there and then incorporating it as an outsourced fee.
Lovely summary.
Thank you so much.
Thank you. Thanks, Matthias.
So I thought that today's presentation went well. I feel like there were probably a few points that I wanted to say that I couldn't get across because it was quite interactive. I knew what I was going to say and I believed in it.
Wow. Wow.
Yeah, so I mean,
peaking at the right time. Huh?
talk about just bang on.
Yeah.
He took every single stakeholder in consideration. He took transition into consideration. He looked at the benefits and the value of a proposed solution for everyone. He presented it well. He came from the history to the present to the future to understand how it had happened.
Does this guy not work for you already?
So I'm very impressed, especially with his ability to balance all the stakeholders.
We're here to talk about the future of premium collection. And fortunately, or should I say unfortunately, there's an incident that took place that led us to where we are right now. So what's the risk that we're facing? I read through everything and I'm pretty confident to say I have identified two risks at hand, namely the investment strategy and the oversight of the insurer side regarding the premium collection. Investment strategies are the end product, whereas the beginning is the 45-day period that the collection agencies and brokers currently have. And then obviously that led to the rolling over of premium leading to investments. So I then asked myself, do we really have to script away the 45 days? Is that the problem? Is the problem the 45 days? Because if we talk about the 45 days, we have to also consider why is the 45 days there to begin with. Obviously, there's reasons because of the volume of the premiums that this insurance, the industry was collecting was too much. So, and then because we talk about reconciliation of unpaid, that takes time. We talk about other premiums that are being collected in cash, that can also take time. Yes, we also talk about the 48 hours or 24 hours of how about we look into that, due to the fact of how our technology is so advanced that it can do that. Those are the questions that I came across. Hence, for me, I then suggest that we can keep the 45 days as there was no harm. Or if we look at decreasing the days, we can easily say within you transfer over the premium within the month that the premium was collected in. Because the truth of the matter is that the 45 days period is also, there's interest to be mentioned also. And again, the collection agencies, they rely heavily on those interests. That's their income. That's their income from the business. Are we then as a regulator taking that away from them?
In terms of your first solution, which goes to the 45 days and allowing the 45 days to continue because it allows the intermediary and the premium collection agency to continue to earn interest. That solution lies very much in favor of the intermediary and the premium collection agencies. How do you balance the risk that still exists for the insurer if you're looking after all stakeholders' interest?
That is what I was going to talk about that now. When you talk about the 45 days period, meaning the broker and the collection house holding that money to them, and that will obviously lead to them investing into the money, then the insurer needs to come into place, having an agreement with the broker or the collection agency that these are the investments that I believe, as the insurer, you should use my money on. Because clearly, we're currently sitting right now speaking about this because of the previous decisions that were made were faulty. We do have several of investment options that we can approach the collection houses and brokers to invest in. Those are pretty much looking at the 45 days of you holding the money, the premium.
You're out of time, but your suggestion is closer to the status quo, basically.
Closer to the status quo, but also looking into the terms of having an outsource fee in place also.
Okay,
Yeah.
all right, thanks, Palesa.
Thank you so much. I tried to stay on my ground and try to push for my suggestion to be taken seriously, but then the judges didn't give me any break.
What concerned me is that her role was supposed to be one of as a regulator, which is mitigating risk. She didn't just support the status quo, she made the status quo even riskier because it motivated the money's in your account, here's an investment strategy, earn as much as you can while you've got it, but also opened it up to saying you can keep it for longer and do these kind of things. So it created an even bigger risk.
Her focus really was, I'm worried about this interest. I'm going to lose money for the collectors and for the brokers.
I just got the impression that she hadn't done enough research. and because of that, she couldn't get to the solution. She didn't have any ideas, basically. Okay, happy?
Happy.
Happy, Caroline?
Yes, happy, thank you.
Okay, let's bring them back in. I'd like to thank Caroline and the FSCA once again for sponsoring this task.
Okay, thank you. So I think the reason this task is so difficult is not because of the technical issues around, premium collection or last year inducements or the previous year it was something else. The difficulty in this task lies in truly taking a position that's in the best interest of the sector. And the sector would include the policyholders. It requires you to lift your game to a really strategic level and understand what the connections are between all the different players in the sector and how that's going to impact on the consumer, and find a solution that answers to all of them, okay? But with this particular focus on risk and on the consumers. And some of you did that extremely well. Okay, some of you managed to connect all the dots and provide a solution that went right across all the stakeholders, which is what a responsible regulator has to do. So I commend you on that. There was a really good understanding in many cases of the entire issues, the technical issues, how they arose and how to resolve them in the future. So there was some good storytelling there, which I think was very great. And there were some presentations which even though we tried very hard to look at all stakeholders across the board, the position you come from in the industry and the sector gave you a particular leaning towards one particular part of the industry, and that came through very, very clearly in some presentations. I want to thank you for the research you did. I know it wasn't easy, you didn't have much time. In many cases, industry sectors wouldn't talk to you because of competition issues, I understand that. And this is a very pivotal and current issue facing the industry. So your research and the challenges you faced in the research were real. So, and despite those obstacles, you all did good research and you all gave us good insight into the research you've done, so thank you.
Thanks, Caroline. Kedi?
Yeah, from my side, it's really a reminder on the softer issues in terms of how you captivate your audience, making sure that they fully follow your line of thinking. We didn't all bring presentation notes and so forth, and in some instances where we brought them, it wasn't easy to follow the presentation notes. Remember, when you come in to discuss, there has to be a reference point as well for us to be able to follow your line of thinking. Okay.
Thanks, Kedi. For me, the only thing you have to do in this challenge, other than, of course, doing the research, is you've got to maintain your neutrality. Caroline mentioned that it's important not to just come from one point of view. Otherwise, you're not doing the job that someone who works for the FSCA would be doing. They would really be considering all the options and not pushing a specific agenda. So the presentation, for me, this was like it was a hands down winner today. Matthias, you absolutely knocked it out of the park. I mean, you did a superb presentation.
Thank you.
When you walked out, I said you got 10 out of 10 because you looked at the history, where did it come from, how did it created the current environment, and gave a solution going forward that took into consideration the interests of every stakeholder, from the intermediaries, premium collection agencies, the insurers, even the Prudential Authority, and most importantly, the customers. And it was innovative. It had solutions that hadn't necessarily been presented before. Your presentation I'll definitely take upstairs to the guys who are looking at the regulatory framework, and I'll say consider this because it's so balanced. So I was very impressed that you were able to rise above all of the different vested interests, because there's many, and find a solution that's in the best interest of the sector as a whole, because that's really important for a regulator. I actually said that one of the issues that happens out of things like this is that I wanted to slip you my card and say, find a job. But I think you did very well, Matthias.
To get a compliment from the regulator is massive. I can't actually put into words how much a compliment like that is. Also from the other judges, I think there was quite positive feedback, or more so than other tasks. So I think today overall was a great day for me. It was a day where I got to show my true self on my own from the start to the finish, and I'm happy that it went well.
So, yeah, Colin and Palesa, today's presentations were a bit iffy for us. We kind of looked at it. Colin, I think yours was way too. The fact that you're a broker in your professional life showed through. And as Caroline said, it's very difficult to kind of leave that stuff at the office. Palesa, I think what came out of yours, it didn't seem that you had done enough research to fully understand and grasp the issues. What we were really looking for was some clear answers on the way forward, and we didn't really get that out of the presentation. So that was, I think you could have done a lot better there. So we've actually decided that nobody's going to go home, as we've always done, and you're all going to be on that stage in the final, all very deserving, barring today's presentation. The points are very close, so it's really anybody's guess who's going to be walking away with the title. You're dismissed.
Thank you. So my overall impression of the day is that once again the Insurance Apprentice has delivered to expectations. So we don't necessarily participate in the Insurance Apprentice because we want solutions to problems. That's a good way of testing the caliber of the candidates. We participate in the Insurance Apprentice because of its ability to attract, through this gaming philosophy, young talent into the industry and expose them to the industry. And the caliber of the contestants we saw today didn't disappoint.
It was a bit disappointing, I must say, to see that Palesa didn't do much research based on how she actually answered some of the questions and so forth. But it was also a difficult task in that the industry is seriously grappling with the challenges around collections, who it should be sitting with, whose responsibility it should be, where the duty of care really should lie, because ultimately we need to ensure that all parties are covered.
So we're getting to the end of the contest now, where we'll know who the winner is, and it's really important they're walking away with some fantastic prizes. There's that premium economy class trip to London, where they'll be spending a week at Lloyd's, a number of great cash prizes, and of course the ability to further their studies with some fantastic bursaries. So we're really looking forward to finding out who the winner is, and hope you guys will be tuned in for that.